Hi everyone, Justin Walsh here, branch manager with Franklin Direct. I've been intending to make this video for quite some time now, but as with anything, there's only enough time in the day, as we've been fortunately very busy. Compliments to many of you that refer us your clients. But this is the importance of the pre-purchase consultation and just some of the most common scenarios that come up with the buyer visuals that I talk about all the time. Because of the prices and because of the rate market that we're in, I've personally never been a part of a market where visuals and pre-purchase consultations and just buyer education has been this important. I mean, it is critically important, not just to have available, but to really excel at for our realtor partners. And I'm going to showcase some of those things. And I'm also going to start off by just showing you what I'm still seeing other lenders provide buyers at this time. So I'm going to start this off with what buyers should not be receiving. And this was a competitor's quote that was sent to a client of mine before they reached out to me. And this came from an SVP of a very large bank. So it's a career mortgage professional from a very well-known bank. And I redacted the names for this example, but this is what is still being sent to a lion's share of home buyers present day. And the problem with this, especially for first-time buyers or buyers that may have heightened fear levels, is this document is just a single-page document that consists of nothing but large denominations of fees, closing costs. All it is cost. And if you get down here to the bottom left, is a very high interest rate, a payment amount over here, and there's no context here whatsoever. There's nothing of any substance that talks about different equity forecasts, renting versus owning, tax benefits of homeownership. It's just the fees and the rates. And this type of document worked fine when rates were 2.75%, may have worked still when rates were 4.5%, but it's just not going to work with a lot of people present day, especially those that need counseling and need homeownership advice. And just guidance on exactly what homeownership entails. And you'll see on the upcoming slides really what kind of visuals need to be involved during a pre-purchase consultation. So the first visual I want to cover is a rent versus own comparison. And the document that you're looking at is what every single buyer receives their own custom version of, and it's always going to be specific to their scenario. So in this particular example, this is a rent versus own comparison, and this is showing a buyer that currently rents for $3,750 per month, paying a small amount of renter's insurance, compared to purchasing an $800,000 home with 5% down and jumping to a monthly payment of $6,121 per month. And this is what is occurring in almost every single circumstance, is there is payment shock that needs to be addressed and discussed, because as a renter, there are elements that are occurring, I should say not occurring, that will be there as a homeowner. The first and most important one is tax savings. As a renter, there's nothing that you are able to write off out of that rent payment. As a homeowner, you're going to have your interest deductions and you're going to have your property tax deductions. One of the things that we've talked about for months is that while rates are higher, the tax savings are substantially higher. Any buyer that you personally worked with in the second half of 2022 when rates were going up quickly, especially in the fall of 2022, if you were to follow back up with them in regards to how that purchase helped them with their income taxes when they filed in 2023, it's substantial. And in this particular example, this person would be going from having zero tax savings per month to saving $1,419 per month in tax savings during year one of homeownership. And that is a big, big deal. And the reason this is occurring is twofold: is prices are high, rates are high, and in order to qualify, income is high. So when income is higher, the tax brackets on the folks that can qualify are pretty significant. So when you factor all those things in together, interest write-offs and tax write-offs are as solid as they've ever been. And this really narrows the gap for a lot of folks. There's a big offset here that's occurring. In addition, you have the $622 per month in year one going to the principal balance, where as a renter, that is not occurring. Once you back these items out, the tax benefit and the principal payment, renting versus owning, when you net those things out, can be much, much closer than what originally meets the naked eye. And understanding this and even getting tax consultations from a CPA, all of those things are of utmost importance right now, because you want to be factoring in your costs of homeownership, but also your savings of homeownership, to really have clarity on whether or not this is the right time to purchase a house. And that tax benefit and the principal payments are very, very important topics of conversation. In addition, we always want to show clients some forecasts for owning a home over the next 10 years. And in this particular slide, this is going to show them net worth increases over 10 years. On the bottom of the slide, you'll see that this is using a 3% rent increase, a 4% property appreciation rate, and then it's assuming that this buyer stays in the same tax bracket over the next 10 years. And going through this, it's very similar to the previous slide. However, this is showing the total rent payments that would occur during those 10 years. This would be the total mortgage payments made over those 10 years. That's without factoring any future refinances, which are very, very likely to occur, especially over a 10-year stretch. This would be the total amount that went to their equity over those 10 years, total tax savings over those 10 years, relative to the non-existent principal payments and tax savings as a renter. And then again, netting this out similar to the previous slide, but showing the sums of those amounts. In addition, this also shows where their property value would be in 10 years with a 4% property appreciation rate, the loan balance at 652, and that original purchase with 5% down in this example would now have $530,000 of equity built into the home. And naturally, this is what occurs with homeownership. So being able to understand and visualize this and see that over time, that investment will build equity and net worth, it'll provide tax savings, and it overall will just continue to improve their scenario as opposed to renting, is just a very, very important conversation to be had. I also included in this example some of the flexible loan programs that are available. On the far right, this is this home run program. This is an affordable loan program that's available on a lot of properties right now. And having this variability in products is very important as well. These particular loans come with lower rates and no private mortgage insurance. So in this example, this saves them $400 a month, just having access to that, still maintaining a healthy tax benefit and monthly principal payment. In this example, you have a cost of waiting exercise. This is obviously something that's occurred to many folks that have been waiting for the last couple of years, folks that were waiting prior to the last couple of years. And in this example, you have an $800,000 purchase price, purchasing a home today at a 6.99 rate. You have the same tax benefits that we looked at in the slide before, the total monthly payment here, their cash to close. And then over to the right, this would be waiting for rates to come down, but having a 5% price increase. Now that property is $840,000. Their finance loan amount is $38,000 more than it would have been buying the previous year when rates were higher. Yes, they have their 5.75 rate, which does give them a lower monthly payment, but you can see right here that tax benefit starts to reduce because at a lower rate, there's less to write off. So there is a difference here. That's very important to point out to folks, is that when your rate's lower, the tax benefit's lower. So it does narrow the gap a bit. And then here would be a 10% increase. Now having $880,000 as a purchase price, $836,000 is the loan amount, still at the 5.75 rate. But because the 10% increase, now that loan amount is $836,000 compared to $760,000 with a monthly payment of $6,042 and the tax benefit here. And we've seen this happen time and time and again to folks that have been waiting for whatever reason, whether it's for rates to go down, to try and accumulate 20% down, even though they have 10% today. There has been as substantial of a cost of waiting over these last several years as there ever has been. And over here on the far right, this is buying now and then refinancing when we get a friendlier rate environment. Their house would still be worth $880, so they would have gained that $80,000 in equity from when they bought a year or two prior. Their loan amount is lower compared to here by a substantial amount. And most importantly, the monthly payment, because they bought before prices went up further, the monthly payment is only $5,583 compared to $6,042 when they waited for lower rates, or $5,771 for waiting a little bit less longer than example over here. And this again is a very important visual for folks to have because this has been what's happened. We can all speculate that it's not going to happen next go around, but this has been what has occurred for every home buyer that's been on the fence for a lot of years in a row now. Diving a little bit further into the process, once your buyers are out there actively shopping for homes, we want to make sure that they have clarity at all times on exactly what that payment will look like if they make an offer on a particular house. So in this example, you have two different addresses that a buyer is entertaining making offers on. This particular property would be at $800,000, giving them two different rate options. Here's what the exact monthly payment will look like, so there are absolutely no surprises at any time. We like to pull the exact property tax rates. I even have a lot of clients get insurance quotes now as they're making offers, so there's no surprises there. Just so there's total clarity and service on exactly what things will look like. The last thing we ever want to have happen is to have a $400 payment spike halfway through escrow because the lender wasn't accounting for higher insurance premiums in that area or anything along those lines. And then over on the other two examples are a property at $850 with the same rate spread and exactly what those monthly payments would be there. So the document that they receive in this purchase report, it's a document that all clients bookmark. We update the link specific to what is going on. In the beginning, it's the rent versus own comparison or whatever the specific customization is for their scenario. But as they're shopping, this becomes a living and breathing document so we can give them full clarity on cash to close, monthly payments. That way they have an understanding of exactly what things are going to look like, the tax benefit as well, and they have reliable information during that shopping experience. Here's another scenario that we encounter rather frequently. This is a buyer that's entertaining three different offer prices, or perhaps we're in the counter offer phase, looking at an offer or an acceptance of 1.5 versus 1.52, as well as 1.54, and how that impacts any rate changes or payment differences, as well as the tax benefit and the cash to close. Again, just having this visual and having this clarity while entertaining different offer amounts, and then even jumping kind of into some of these other slides, like what does that do long term? Well, you know what, over 10 or 15 years, these different offer prices really kind of minimize things. When you fast forward 10 years into homeownership, whether it was 1.52 or 1.54, it really starts to get watered down as time goes on, especially with property appreciation and things like that. Last but not least, this is something we can encounter before escrow, but more so during escrow. Let's say there's a request for repairs and a credit for repairs. This particular example shows the buyer getting a $15,000 seller credit, so keeping the purchase price at $800,000, and then having that $15,000 credit go towards their cash to close, as opposed to over here, a $15,000 price reduction would still give them about $14,000 more at closing. And then when you look at the payment difference here, a $15,000 price reduction only changes the payment by about $113 per month, versus a $15,000 seller credit can lower their cash to close by almost the entire $15,000. This visual for listing agents is also very handy. You want to go with a credit before a price reduction. That $15,000 credit that can allow you to do a lot more from a financing perspective to help with affordability than a $15,000 price reduction. $15,000 credits can substantially lower the cash to close. They can also lower the rate. If you wanted to keep the cash to close the same, you can lower a monthly payment a lot more with a credit than a price reduction. And I can talk about that further in other slides. But again, just having these visuals and being able to quickly address these common escrow scenarios and really take it off of your hands and allow it to clearly and concisely communicate to the buyer is so important just to avoid confusion. Escrow cancellations are obviously up over the past couple years because there's more fear and uncertainty, and visuals and calm and confident communication can just really help keep those problems at bay, because there's clarity at all times as to how that impacts your client. So in summary, these purchase consultations allow a lot to happen. There's more clarity for your buyers. The education that they get reduces fear levels drastically, allows for smoother escrows. It increases buyer pipelines, and the service and reputation. This type of service is a direct reflection on myself. It's a direct reflection on buyer's agents, and just that hand-holding process. A lot of these purchase consultations we've been flexible to doing before pre-approval, just to provide more clarity and a little bit more optimism into going out there and getting pre-approved and beginning the home buying process, or at least the home searching process. If we can be of any assistance, if you have any questions, if you have any buyers that would be benefited by going through one of these consultations, regardless of whether they use us or they end up using someone else, we are happy to provide this type of consultative approach because it is necessary in the current environment and it's the right thing to do. Thanks for watching, and we'll talk soon.